Hello friends, this is Raj Sastry from Raj Option Trading. Today is May 23rd, 2022. Hope you're all doing well. In today's segment, let's take a look at volatility compression. The volatility compression happens when the Bollinger Band gets inside the Keltner channel, and a lot of technicians watch this very carefully because when this happens, stock has to move, it has to go high or low pretty quickly. So let's look at this technical indicator and see if we can buy some great stocks and go from there. Look, we got a stock here, EXPI. Many of you know this company. The stock has been beaten down big time, but now Bollinger Band is inside Keltner channel, and also the price crossed the 5-day EMA, exponential moving average. So let's look at stocks like this and see if we can buy them and go from there. All right, let's do a quick market update here. So we are looking at Bollinger Bands getting inside the Keltner channel. So this indicates a good opportunity, especially if we look at this carefully. So we'll start with a quick market update and let's look at stocks with price more than $5 and volume more than 1 million shares traded, and Bollinger Band inside the Keltner channel. That represents a compression of volatility, and stock has to go high or low pretty quickly. And the price has crossed above 5-day exponential moving average. That tells you there's a good chance the stock can go higher. All right, so with that, let's jump in and get started. From a futures perspective, look, after a nice and very good day today, futures are pointing in downward direction here, which is very natural. After a great day here, futures typically go down, and we'll see how it goes here. So Dow Jones futures down by 101 points, as you can see here, and S&P 500 as well as Nasdaq futures are also down. Oil is down too. And from a news perspective, we got Snap here. Snap plunges 30% after CEO says company will miss sales. And they're also cutting back on hiring. And a lot of the companies are cutting back on hiring. We got to watch that carefully. That might have an impact on the labor and job market as we go forward. And then you got Zoom here. Zoom Video announces earnings, and after initial surge, the stock started giving back slightly. We'll watch how this goes tomorrow. And we got here Neo dives, and Tesla is also towards 10-month low here, and XPeng, which is China's EV stock, also came down here. And then you got Autodesk here, one of my favorite stock. Stock drops after a downgrade here ahead of earnings report. So all these technology stocks or growth stocks, in other words, they're having hard time because of this high interest rate and inflation environment. All right, so with that, let's jump in here and look at the fear and greed index. Look, from a fear and greed index perspective, we are in extreme fear. So we are around 12 or so. We increased slightly here. I can see us going back to say 20 or 25 as we go forward. So things will improve from here, but happen slowly. We'll go 2 steps ahead, 1 step back. As you can see from futures, we are slightly lower after a great day. All right, now let's jump in and look at the market here. From a market perspective, look, we got 2 nice days here. Look, we got 2 nice days, and now futures are pointing to a little bit downward direction here, with the Dow Jones Industrial Average futures pointing to 108 points down here. And same story in all the other futures here. S&P 500 futures also down after 2 nice days. It's trying to give back slightly. And same story in Nasdaq. Nasdaq also same story here. Nasdaq looks like we had 1 good day here, not 2 good days like other 2 here. So we got to be careful here. We got a lot of uncertainty, but things can get better from here. We'll keep a close watch. Look, we got gold. I think gold is still a good one to buy. And look, crude oil is slightly coming down here. Still We got to wait for this to drop off slightly before we jump in here. All right, interest rates are going higher. That will apply pressure on the stock market as usual. Bonds are getting sold off as usual because the central bank is selling the bonds. That will apply some pressure on the bond market. All right, let's look at the most active ETF to see what's going on in the market. Look, here we got most active ETFs in a one-day time frame here. Look, we got a broad rally today. Almost most of the ETFs went higher today, with the exception of TLT, which is bonds. Bond got sold off here, and we got here retail stocks are completely clobbered here. You could buy some great retail stocks, or even XRT for that matter. Completely clobbered here. Look at the RSI here, 33. That tells you this retail segment is completely sold off here. And then we got we got UUP dollar. US dollar is slightly lower here. That's always helpful for stocks here. And keep watching here. We got IV percentile and PC put call ratio here. And look, right now many of these IV percentiles still high. S&P 500, look, 73. You can make some good money by selling put options on SPY way below current price here. And we got QQQ, same story, elevated IV percentile here. Means you can make some good money. And look, we got XRT, very high elevated IV percentile here. Look, it's 100, so you can make some good money selling put options on XRT. And we got SMH, one of my favorite here. You could sell some put option here and make some great money. If you're a long-term buyer, look at the RSI here. If the RSI is low and stock ETF is performing nice, you could buy those. For example, you could buy right now you could buy some QQQ, SPY, both are good ones here. You could buy them right here. Nice performance in the 5-year and 10-year, as you can see here. And you could also buy XLK here, which is a good one here. You could buy this up here, beaten down, but nice long-term performance here. I also like XLV Healthcare, great one. And you could also buy some SMH, which is semiconductor ETF here. A great long-term performance, but short-term pain right now. All right, now let's jump in here and look at volatility compression. I love to look at volatility compression all day long. This happens when Bollinger Band gets inside the Keltner channel. This represents tight volatility compression. You can do a lot of option strategies, and you could also buy the stock depending on how the market might go. As an example, when the stock price crosses above 5-day EMA, there's a good chance the stock can go higher pretty quickly. All right, now let's jump in and look at the stocks where we got a volatility compression and Bollinger Band is within the Keltner channel. Look, we got here all great stocks here. Look at the stock, we got EXPI all the way to FULT here. And many of these stocks have got nice overall score. I love the ones with a high overall score here. Look, we got few ones with nice overall score. EXPI, top of the list here, which is okay. It's a middle of the road here, 50 overall score. RSI is low. That tells you could buy the stock right here. And look, in a 5-day time frame and 10-day time frame, stock is going higher. That tells you there is a chance that this stock can go higher. And right now, there is a Bollinger Band is within the Keltner channel. And we got GFS here, Global Foundry. Stock is completely beaten down here. And look, score is low here. But look, stock is trying to go higher in 5-day, 10-day. And even 1 month and 3 months, that tells you this stock is trying to make a move here. Even though RSI is the middle of the road here, this can even go higher. And the list goes on here. We got 10x Genomics here. Again, this one has got a little bit lower overall score here, but stock is making a move. And right now, Keltner channel, Bollinger Band is within the Keltner channel. And that's why stock is making a move. And we got the list goes on here. I love the one with nice and high overall score here. Look, Baxter is a good one here, and Verizon is a good one for the folks who want to get some nice dividend income here. That's a good one here. The list goes on. I love stocks like Danaher here. It's a great one. Look, stock is making a move at this time here in 1 day, 5 day, 10 day, and so on and so forth. And now what we'll do is we'll do a quick build here and get the Morningstar ratings here. Alright, so look, we got the Morningstar ratings here, and also we got industry standard financial and Piotrowski F score and growth profitability and financial score from Morningstar. Look, we got few stocks which are doing well. Even the first one, EXPI, it's got a nice growth here. Financials are okay. Piotrowski F score 5, that tells you books are improving. That tells you could buy EXPI here. And we got list goes on. I love stocks like look, we got AVLR here. It's a SaaS company, as many of you know here. A little bit lower score as you can see here, but stock is making a move at this time. 5 day, 10 day stock is going higher, and looks like they got a nice next year growth here. And the list goes on here, and I love the one with nice and high overall score here. We got few with nice and high overall score. Look, we got ADT here, $7 stock here. Overall score is low here. I would go with the higher overall score versus ADT. And also keep watching the RSI here. When the RSI is high, don't go there. You can go with the lower RSI stock here. Look, we got Future here, Chinese stockbroker here. A little bit high RSI. I would probably wait on this one here. Stock has gone up already. I would wait and go after lower RSI candidates here. We got a lot of them, as you can see here. All right, so what we'll do now is we'll go to Thinkorswim platform from TD Ameritrade and look at few charts here. First, let's look at EXPI. All right, let's go here to Thinkorswim here and bring up EXPI. All right, so what we'll do is we'll look at EXPI here and go from there. Look, we get EXPI. All right, so look what's going on in EXPI. We got here, we got solid line here. Look, we got a solid red line here and solid purple line and a solid blue line here. Those are the Bollinger Bands here. Solid line represents Bollinger Band. And we got here dotted line here. Look, dotted line is Keltner channel. Look, right now Bollinger Band is coming inside the Keltner channel. That tells you right now volatility is compressed. Stock has to move fast. And look, right now IV percentile is 66, a little bit high here. So stock has to make a move. As you can see from the chart here, stock is trying to slowly go higher. And what we'll do now is to look at this in a better way. Let's go into a chart here and look at this stock in a better way here. All right, so we got EXPI here. Look what's going on here. So EXPI and let's see here. Look, we got EXPI stock is stabilizing, as you can see here. RSI is trying to go higher. That tells you stock is gaining some momentum. And right now volatility is coming down, as you can see here. And look from a DMI perspective, looks like blue line might go higher. Too early to call right now. But look, the smart money, the check in money flow is going higher. That tells you money is flowing into the stock. So at this time, I think it's a good one to buy some EXPI. It's a low price stock, as you can see here, just $13. So you could buy the stock outright, or you could do some option trading techniques here. So if you want to do option trading technique, given price, given the IV percentile is slightly high here, you could do spreading strategies here. So you could do spread here, you could do EXPI. Look, we got EXPI right here. You could do 16 days out here, and you could buy a spread. I would say because it's $13, depending on how much money you want to put in this one, you could buy maybe say 10 and 20, $10 wide spread here, right here, 10 and 20. or you could even do 10 and 15. That's also good here. You could do 10 and 15, so that way you don't tie too much money into this trade here. You are paying $2.60, as you can see here, and remaining $2.40 is your profit potential here. So you're almost making you're doubling your money. You put in $2.60, and you're making you're putting in $260 and you're making $240, almost double your money type trade here, which is a good one here. And if you're a little more aggressive, you could also do back ratio call spread here. So you could go here and do a back ratio call spread. All right, so you're actually buying two. Actually, let's yeah, you're selling a $10 call option here, which is within inside the current stock price here, and you're buying two 12.5, so you're paying $1.80 here. But as you look through here, if I take you to analyze trade here, look, this this trade can do very well here. So let's go here, set the slice to break even here, and 917. Look, we got the chart here, and let's make sure we got just this one here. I think we're good here. Let's okay, so look what's going on here. So we got stock, and as stock goes higher, if I go keep going here, you'll start making money. Your break even is right here. Look, your break even is 16.8 here. The moment stock goes over 16.8, you'll start making money, and keep watching here, you'll start making money there. And as you look through here, you could move the price slice all the way to here, and the chance of stock going higher more than more than 16.5 according to this is about 26.43%. That's why from a probability perspective, a little bit low probability, but still if you're aggressive, you could go with this. Otherwise, you could stick to the spreading strategy, just a regular spread. This spread here, which is a back ratio spread, is a little more aggressive because your chance of winning is slightly lower, as you can see here. All right, now what we'll do is we'll look at one or two more stock and go from there. Look, we got here, the list goes on here, and we got 10x Genomics. It's biotech stock here. Stock has not done money for investors, as you can see here, for a long time. I would go after better ones here. Look, we got one of my favorite here, Danaher. You could go with Danaher, which is a quality stock here. Stock is making a move slowly, and right now RSI is still low here. So I could go to Danaher here and go to the chart here. All right, so look, Danaher, look what's going on here. Smart money is flowing into Danaher. That's why it's going higher, and it can still go higher. And on the balance, volume is also going higher. That's like a polygraph test here. Volume is flowing into the stock here. And look, DMI chart, the blue line wants to cross over red line. There's a bullish indicator here, and momentum is picking up with the RSI going higher. I think it's a good one here. You could buy Danaher up here. And if you look at my Bollinger Band here, let's go to the Bollinger Band. Look, from a Bollinger Band perspective, look, we got the solid line here, which is Bollinger Band getting inside the Keltner channel in a 20-day time frame here, and same story here. That tells you there's a tight compression of volatility. And right now, from a 5-day moving average perspective, current stock price is more than crossed over 5-day moving average. That's a bullish sign here. So if you're an options person here, if you're a stock person, you could buy the stock outright. Danaher is a great stock here. But if you're an options person here, you could go here and go to Danaher. I would say go 116 days out here. Danaher, as you can see here, right now $253, all-time high is 333. Look, there is a nice swing here. It can go higher. And look, I would say, go around 250 or so. And right here, look, we got 250 right here. You could buy a $10 wide spread right here. Look, you could buy here a $10 wide vertical spread here, 250, 260. You're paying $5.05 here. which is which is 505, and you're making 495. So it's a almost double your money, make double your money type play here, and your break-even point is 255, just 2 days above the current $2 above the current stock price. And if you want to look at the profitability here, you could go to Analyze tab here and analyze the trade here. All right, so from a trade perspective, look, this is a call spread. As you can see here, your break-even point is right here. Look, your break-even is right here, around two. I think we saw that earlier. Look, break-even is around 254.99, as you can see here. The moment stock goes about 254.99, this is when you'll start making money. Look, it's going higher, and because you bought the spread here, your profitability is capped here because it's a spread. You'll make $490 like we saw earlier. And look, you got your break even right here. If you move it all the way here, look, probability of making money is pretty good here. Look, there is a good chance that you will make money here. And if I move this all the way, I think we got a nice chance of making money here. You could you could buy this spread here and go from there. If I may take it all the way here, I think there's a nice chance you'll make money. We'll also do one thing. We'll go here, set slice to break even and 917. Look, there's a 44.9% chance that you'll make money, which is good enough percentage here. And if you're a little more aggressive, you could do back ratio spread, which is also one of my favorite strategy for stocks like Danaher. So you could go here 250 right now. You could go here and buy a back ratio spread here. All right, so back ratio spread. Look, we're buying 260 here, and we are selling 250. So you're paying $10.80. Not too bad here, not too much money. Instead of buying the stock outright, you're just doing this call ratio spread here. All right, so you could confirm and send here. Look, you're paying here $2,080, as you can see here, and your profit potential is infinite. If the stock goes about 280, you'll make money. There's a good chance Danaher will surely go above this price here. And if you want to look at the profitability here, you could go to Analyze tab here, Analyze trade, and look here. We got our look what's going on here. Probably we have two things going on. Okay, let's remove the vertical spread here. We got back ratio, and let's also do one thing. Let's set the slice to break even. All right, 917. There we go. Let's remove this here and remove that and make it a little bit bigger. All right, so we got our back ratio spread here. Look, this is our profitability right here. That's our break even right here. If the stock goes above, say, 280 or so, we'll start making money, and our profit is unlimited. As you can see here, you'll start making money if it goes above, and if you keep it, you'll start making money. With all these strategies like back ratio spread, look here, your chance of making money is 27% as of now, because you're doing a back ratio spread. Typically, the percentage, the probability is less for these type of trades here. But if the stock goes high, you'll make a nice amount of money. That's why a lot of people go for it. All right, so and as you look through here, you can also look at the IV percentile here. Look, we got IV percentile right here. When the IV percentile is super high, for example, Netflix is a good one here, 74. And we got some more here. We got MPW, Medical Properties. It's a low price stock. For stocks like Netflix as an example, and even the ones with a little bit higher price here, maybe Twist, you could also sell some put option way underneath the stock price and make some money that way also. All right, so we got great stocks here. You could look at the stocks with nice and high overall score here, like International Paper, Fidelity National, all great stocks here. You could apply same strategies, either a call spread or a back ratio spread, and make some money here. And FNF right now, look, there is a high IV percentile. You could sell some put option way below current stock price and make some good money there too. All right, now let's look at few more here. Look, the list goes on here, and all the stocks have same criteria. There is a tight volatility compression. Bollinger Band is within the Keltner channel. This is what technicians look for, and they will make some trade by looking at some great stocks here with nice overall score. You could make some trade here and go from there. Look, as you look through here, we got industry standard here, Piotrowski F score, Altman Z score, and Morningstar growth profitability and financials. I like the one with the nice Piotrowski F score. Look, we got Adobe here. Adobe is one of my favorite at these levels here. Stock is beaten down middle of the road here. RSI is 50 here, and look, it's got great financials. Piotrowski F score 7 tells you books are in a great shape here. I would go with the stock like this one here. And look, we got HCC here, Warrior. This one has got nice and high Piotrowski F score here, but revenue growth is negative, as you can see here. Performance is solid, and right now RSI is 51 here. You could buy this one also. It's also a good one here, and list goes on here. I love one with nice and high Piotrowski F score. Look, MRVI, it's a great one here, nice and high overall score. You could buy MRVI. Stock is turning around, but the problem is RSI is slightly high here. I would go with the lower RSI candidate and go from there. All right, so with that, let's quickly conclude here. All right, so when the market is very volatile, be selective. There are a lot of good stocks here. You don't need to rush in. Go after some solid candidates here. And when the Bollinger Bands are within the Keltner channel, it represents a tight compression of volatility, and typically energy has to release very quickly. And during the tight compression of volatility, if the current price crosses above 5-day EMA, there is a high chance the stock can go higher quickly, and you could buy call options, or say call spread or back ratio spread in call spread in those scenarios, and make some good money. And few stocks you could do these strategies is EXPI, TXG, Global Foundries, AVLR, MGNI, MPW, DHR, Adobe, MRVI, and BAX. You don't need to always do call options. You could also buy these great companies and invest that way also. So with that, thank you very much. Happy investing and trading. Please subscribe.